Hi, are you confused about mortgage interest rates? You aren't alone. So we thought we'd take this month's timely topic and dive into that a little deeper to help you understand the factors and also debunk some common myths. This is Christine Atkinson with Columbine Mortgage, and this is your April timely topic. So, just starting at a high level with what impacts mortgage interest rates, I'm sure if you've been watching the markets at all, you have seen them fluctuating all over the place, especially these days with all of those tariffs. And what that tells you is that there's a lot of global events that can impact rates. So, there's our own administrative policies in the US here, but also the global response to those policies, any sort of economic release of data. We get excited every month when inflation and the jobs report come out, as well as the Federal Reserve meeting and what they're going to say and how they're handling all of this. These macroeconomic impacts do move the interest rates one direction or another over time, and often daily as lenders adjust to the impact of those decisions. Next, once we get past the macro, let's focus on you. The loan that you pick is also going to impact the interest rate that is available to you. So, conventional loans versus government, such as FHA, VA, and USDA, have different interest rates. Different loan terms have different rates. Fixed versus ARM have different interest rate. Different loan programs within those have different interest rates. So, all of those will have an impact. And then there's you and your own profile, your credit score, how much you're going to put down, whether you're a first-time home buyer, you might qualify for some affordable programs, etc. And then, of course, the property can drive different interest rates. So single-family homes versus condos have different rates at different down payments. So all of these things come together at any given time to determine what your rate is. You'll see advertised rates out there, and they're really a benchmark, and our own included, based on a specific profile. Okay, next, let's talk about some of those myths. The first one is that the lowest interest rate is always the best rate for you, but that's not really true. When you get into lower interest rates, and that is a choice, oftentimes there is a discount fee with it. Sounds like you're getting something, but you're actually paying upfront for a lower interest rate. That may be the right decision for you, but it may not. So we always like to do a little payback analysis to see if that's truly the right choice. The next one is when you see a rate advertised, that's the rate you can get. Well, oftentimes what is advertised is a specific profile that's most advantageous for that lender to market to you to get you to call in. So then they'll figure out what your profile is, and the rate could be very different from that. So just beware of that. And the last one is there's a whole lot of marketing gimmicks out there these days with free refinances and lender paid buy downs and mortgage insurance you don't have to pay for. But of course, there's nothing free in this world. So as expected, those things are really trade-offs between usually a higher interest rate and whatever it is, the free refinance, lender paid buy down, etc. It might be a good choice for you, but we always like to break it apart so you can make the decision on what's best for you. I'd be happy to help you analyze what your rate would be, what a good scenario would be. So feel free to reach out. Take care. Bye.